Hi, this is Anthony Parent of IRSMedic, and we're going to dedicate this podcast to Representative Brian Higgins. Representative Higgins has become alerted to the unfair tax that Canada has passed against Americans with vacant property, and he is fired up about it, and he wants to get something done about that. We just discussed that in the last episode, if you want to check that out. But what we want to do is Representative Higgins, welcome to the world of international taxation, and welcome him and sort of explain what are the other issues that are going to be related, people are going to discover. Because as people who with underused the housing tax, as Americans get hit with that, it's going to lead to naturally other questions. Many people have no idea that they're in wild non-compliance with the United States. And that is sort of the problem. This is just the tip of the iceberg. So Representative Higgins, and if any of your staff is watching this, imagine yourself as a United States person born in Buffalo, New York, and now you are living in Canada with that dual tax citizenship. And let's talk a little bit about what your life is really like and some of the stories you might not have heard from some of your constituents. So, John, let's give us some of the basics. Okay, so someone who is a U.S. citizen, and the word we often use is, sort of that fatal birthmark, that nasty little thing. Why don't you run through what if someone is a U.S. person in Canada and they're running a business? They have a business they are running. It's creating a lot of jobs in Canada, creating a lot of jobs in the United States, a cross-border job. Let's say they have a plant in Buffalo and they have one, on the other side, they both sides of the Niagara are covered. So explain to me what kind of things that they have to think about that someone in other countries don't need to, that all the other countries that don't have citizenship-based taxation don't.
They don't have time to think about running their businesses properly. Okay, the U.S. tax system is so intrusive because the first question would be, in what form, no pun intended, are they running their business? If it's a Canadian-controlled private corporation, it's a per se corporation under the U.S. Treasury entity classification rules, which means that, 5471, guilty, subpart F income generally, if it uses a retirement plan, etc. Very expensive compliance fees, but there's also a litany of individual reporting requirements, right? Because remember that when the United States is deeply suspicious of any income streams or assets that are non-U.S., deeply suspicious, and therefore requires reporting under threat of really draconian and extreme penalties of any and all of these things. Now, we all know about Mr. FBAR, I think, one of the most draconian, idiotic things out there. If a U.S. person has non-U.S. bank accounts and other kinds of accounts that in the aggregate exceed $10,000 at any time of the year, determined, by the way, using the U.S. Treasury exchange rate as of December 31st of the year, then they have to file this what's colloquially referred to as FBAR form, Bank Account Report, FinCEN 114, with Financial Crimes Division of Treasury, every year under threat of huge penalties. But there's a Form 8938, which comes from the whole FATCA thing, Statement of Foreign Financial Assets, that generally would include most of the things on the FBAR, but other things like individual shares, et cetera, et cetera. The company, there's the 5471. If they're setting up a Canadian registered disability plan or something, there may be a Form 3520. If they receive anything from a foreign trust, if they receive a gift, an inheritance from a relative who's not a U.S., it goes on and on and on and on and on. But what's interesting about this is, to come back to Canada's underused housing tax, right? And Congressman Higgins is that, as I was thinking this problem through, it actually occurred to me. I think it's fairly obvious that a lot of these Americans who own second homes or vacation properties in Canada probably have Canadian bank accounts. Why wouldn't they, right? If they're spending time there. And and I expect that a lot of those people do meet the threshold requirements to file these information returns, these U.S. penalty-laden information returns, specifically FBAR and Form 8938, et cetera. And I mean, because these requirements are so obscure, I mean, I know, Congressman Higgins is screaming about the injustice of Canada's tax. Maybe he should be educating people about, their own U.S. obligations. If they have, these evil foreign bank accounts in Canada, near their second homes. But I bet you that, I don't think that Americans are any different from anybody else in the world who just go into shock when they hear about these requirements. And I bet a lot of them have accounts that are not complying with these rules. And, interestingly, they very well may be subject to these FBAR penalties, right, in Form 8938 and stuff like that. So, it's interesting how when you start these discussions, it just moves on to something else and something else. And, I think these people, especially since they're, making a lot of noise about this, I think they might want to consider, whether they're in compliance with their own U.S. laws governing this type of stuff before complaining too much about Canada's.
John, thank you, because you reminded me of something. I have a client to send to you. Because you reminded me and what you're saying. So this is what I would want to say to Representative Higgins is not that you have to think of when someone has dual status, the compliance cost is insane. And oftentimes it's the compliance cost just to prove they don't owe anything to the IRS or get a refund. The second thing is the amount of anxiety that this causes, because these penalties are like are sort of a bolt of lightning. It's very difficult, and if anyone doesn't, I'm updating my Form 5471 trading guide. I got two sections done. I only have 12 more to go for 2023. Start watching that. Start watching my 5471 trading guide to sort of understand how insane it is. And my first video is just 30 minutes of explaining what I do, and this is what I actually updated in my guide, and I was kind of thinking of things all wrong, and this is the anger and this is the hate that our government has against us, because when you look at the evolution of how this all happened, the 1950s were known for many things, but in the tax world, they were known for high marginal tax rates up to 90%. Now, there was a very easy way to get out of this. It's basically just park your money, move your money overseas, park it there, and you're going to just, you're only going to pay taxes when you move the money back into the U.S. What you're taking advantage of is something called deferral. Just like a 401k defers your income, but there's no limit to it. You just put it overseas and it comes back. So now you have to think about this. You have a country that wants to tax your stuff. 9 for them, 1 for you. And you have an easy fix to get out of it. Oh, I'll just go overseas. So what they did in 1960 is they created the Form 5471. And that was it was a form that was intended to be as punitive as possible for having the audacity to move your money overseas. Now, you could still get away with deferring your taxes for a couple of years. However, in 1962, that's when Subpart F was passed, which essentially ruined that deferral. So this has all been, when we look at these forms, we have to look at these as being designed, put into law by people who wanted to tax 9 for them, 1 for you. And that is so beyond evil. And that's what I would say to Representative Higgins is look to how we got to this 5471. Look to how we got here. It was a natural reaction for our government absolutely being beyond the pale. 90%. Can you believe that? And now this all makes sense. Once you understand this is all, the government's reaction is all because people weren't paying they didn't pay that 90% tax rate, and they're going to get them. So that is, and the last thing I want to say, and this is why I thank you, John, is that how this is enforced. How these penalties are enforced will turn your stomach. If you look at the cases that come out, and they all try to paint these people into things they're not, but basically who they love to attack. Let me just sort of lay the groundwork of who they love to attack. If someone is elderly, towards the end of their life, maybe their faculties aren't there 100%, and they inherited a large bank account many years ago from their parents, or somehow they did it many years ago, and then they had the idea to voluntary disclose this to the IRS using the offshore voluntary disclosure program. These are all people who said, hey, IRS, I have a problem. I haven't filed this FBAR. Please take it easy on me. Hey, I'm a good taxpayer. I really didn't know. Kind of complicated. I had no idea that this was a thing. In those cases, this is what you can expect the IRS to do: assess a 50% penalty on the highest balance. Cases where the people are elderly, they're never going to do this again. They made good, honest mistakes. They never really did anything else wrong in their life. Their taxes are pretty good. They were ignorant. They possess the ignorance that mostly everybody does about foreign reporting in FBARs. And those are the people. So, John, I have someone that I'm going to be sending over to you who fits that profile. The IRS has gone after him so aggressively. And, the whole purpose of penalties in theory is to encourage, compliant behavior. And it's actually backfiring because the way they assess penalties about people who disclose something. And so the people who have been getting away with things are those who've like, yeah, I'm just not going to do anything. I'm just not going to do anything. Now, sometimes they don't have a choice that, they get a letter, bank account gets frozen, they have to come into compliance. Sometimes they have to come back to the United States and the anxiety is just killing them and they'll have to do that. But that is generally what it is, that this aggressive penalty regime is decreasing compliance, and it's utterly nothing. There's not one representative, you cannot find one person in your district who would say, yep, this is exactly the law I want it to be. And so that's what I would say, Representative Higgins, you can't find anyone. And what I would say is take back your authority. Take back your authority from these regulations. And as I mentioned in the previous podcast, citizenship-based taxation is not something found in the law, but it's only in the regulations. Therefore, if it's in the regulations can be changed to get rid of a lot of this nonsense that just terrorizes people with no discernible impact. There's not a lot of revenue that's coming in. It's just rather a threat, a sword that is just getting people all agitated and often doing crazy things that waste everybody's time, including the IRS. That's how I see it. Keith Redman, you're joining us, global advocate for the taxpayer abroad. What would you want Representative Higgins to know about all of this? That hey, okay, look, this Canadian unused property tax may alert people to other problems that are going on. What are some of the other problems, Keith, that you think he should be made aware of?
Well, certainly the FBAR situation, as you were just discussing, certainly about the FATCA situation, the Foreign Account Tax Compliance Act, and the damage and discrimination that's being done at the hands of the U.S. And, we've spoken about the citizenship-based taxation. I think this kind of, hopefully, I think this could open up a Pandora's box. And if you recall the story about Pandora's box, the last thing that's left in that box is hope. And hopefully that he can maybe bring to the attention of the absurdity and the damage done by the U.S. with all these regulations for people who are living outside the United States, who are deemed U.S. persons. So perhaps this is a hopeful situation by opening up this Pandora's box.
Yeah,
that's how I look at it.
Yeah, we're hoping he actually watches this, so hopefully some of his constituents could make sure that he does.
We'll have to send it to him.
Maybe in the great city of Hornell, New York. My family's from that. He might be in that district, Hornell, and upstate. Man, that's an interesting place, man. A lot of hardworking people up there. So John Richardson, what would you say? Anything we're missing here that you want to say? Hey, look at this. And what I would say, one thing before we get there is, a lot of people, we've had a lot of people who have had to renounce their U.S. citizenship. They've had to make a decision of where, they moved across and they fell in love in another country, and that the FATCA, the banks are freezing them out, so they can't even have a life because FATCA is such a demand on foreign banks. They don't want to have Americans around. John, can you think of anything else that Representative Higgins should really know about the impact of U.S. taxation and the FBAR?
Well, I think he needs to understand that all the evil has its origins, the original sin, if you will, is a set of U.S. tax rules that impose worldwide taxation based on the circumstances of their birth, that is citizenship, rather than the circumstances of their life, rather than residence. I think that's the first thing that needs to be understood. And the second is that basically this has to come to an end, or people are no longer going to be able to be U.S. citizens or U.S. persons. I mean, it really is that simple. Now, I think there is almost zero chance of Congressman Higgins taking an interest in this without extreme pressure from his constituents.
Yeah.
So I think the real message here is that if you're some person living in the United States who happens to own a property in Canada, and you correctly assess that you are being unjustly discriminated against because, and really only because of your citizenship, so you're now having firsthand experience with the pure evil of imposing taxation based on immutable characteristics like a place of birth, etc., that you need to come together and put pressure on Congressman Higgins and his ilk, okay, to recognize this as an issue and bring it to an end. And I think that you ought to reach out to an equivalent person in Canada. You know how in the old days, letter writing campaigns, a sister city, for example. I think that everybody should reach out and find somebody who's oppressed in Canada by citizenship taxation. Right. Start writing back and forth about your mutual citizenship-based oppression. That would be my feeling. But anyway, this is the purest probably ever designed. And the exit tax rules come from this. I mean, U.S. exit tax rules are, without a doubt, the most evil, aggressive taxes based on change in tax residency and mobility the world has ever seen. And there is not even a second.
Well, here's what I would say is, like, what do you want to be a part of? And this is what I would say to anyone, Representative Higgins, what do you want to be a part of? Do you want to be a part of a government that is good? Or do you even want to be a cog in the worst government of all time? And most people aren't aware of it because it's not affecting them. Hold on for it yet. It's not, the IRS isn't a problem for you this year. I don't have a problem, but things change, circumstances change, and it's probably coming for you. And then you'll be all alone. Oh, why doesn't anyone care about me against the IRS? It's like, well, because you didn't care when, it was someone else's turn in the barrel, but it's your turn now. And that divide and conquer is what we have to fight.
Look at the Biden Green Book for 2023 that came out in March of 2022. What you would find is that many of his tax proposals are things that have been applied to Americans abroad for years. Okay, so I think we'll probably close this podcast with a very simple message for U.S. residents.
Yes.
And that is as follows. All you need to see and understand your future, if you do not stand up against this, is to look at the experience of Americans abroad. That's all you need.
That's so true. They are, as we said, they're the canary in the coal mine. They're the ones who get the brunt of it first. And all of these things, there's going to be our own domestic FBAR. Oh, you need to report your bank accounts. Oh, you didn't. Oh, it's an important crime fighting tool. And you need to, and, we see these, we see them. And how much stuff can they do with regulations? Well, pretty much anything, because they can impose worldwide taxation via regulation. So that's all it takes. Who cares what's actually signed into law? It doesn't matter, right? It doesn't matter what the law is. And that's where, I would say if I was a representative, I'd be a little upset. I'd say this is the law and you guys make up your own law and you're not you're not elected. I am.
But Anthony, I think, let's not kid ourselves here. We all agree that these U.S. policies are evil, but let's move on to the next video where we really illuminate how evil Canada's become with this.
All right. So we'll move on to our next one because we're going to be talking about sort of the ways, try to getting out. When a tax law is passed, the first thing is like, how do I get out of it? How do I plan my way around it? So our next episode, we're going to be talking about the difficulties of avoiding this tax, because, that's what we all kind of think of. It's like, well, how bad can it be? There's got to be a fix to it. So join us. Join us on our next episode where we'll be discussing the attempts to try to avoid Canada's underused.
We're going to talk about what the tax really means as opposed to what it says. Is what we're going to do. We're going to dissect it.
All right, fantastic. All right, join us on our next episode. For Keith Redman and John Richardson, this is Anthony Parent of IRSMedic. Thanks for watching.